What's good, traders? Welcome back to another video. In today's video, I'm going to be breaking down this GBP long position that we executed on that $10,000 account. Let me quickly close this. So when it comes to this particular trade, price approached a 4-hour level of support. So you can see we have support here where price respected. Price broke out of that support level, broke back inside, closed with this bullish engulfing candlestick. Then we had a retest giving us that inverted head and shoulders right there, and price continued pushing upwards. So now price again came all the way down to that level of support again, and now give this engulfing candlestick right there. Even if we drag this here, you see that price has respected this level multiple times. Price has respected this level. So I was looking for buys immediately. Price got to this level, but I waited for a confirmation, which was this engulfing candlestick. I was waiting for price to close with that candlestick right there. I had my Fibonacci drawn already. Once I saw that this candlestick was retracing this red one right here, and the 4-hour candlestick was about to close around 7 a.m. Once I seen that it was about to close with that bullish engulfing candlestick, I set my Fibonacci up, had my buy limits around that 50% level, stop loss below 0.764, and set my TP. If we follow market structure here, you see that price from this point here gave us that lower low, lower high, lower low, lower high, lower low, lower high, double bottom, higher high. Price has broken structure, giving us a bullish market structure. Higher high, that's the higher low that triggered our trade, and price continue pushing upwards, smashing our take profit. So this is what price did right here. Clean structure break. So I waited for price to get to a 4-hour level of support from a downtrend. Price got to a 4-hour level of support, started to show signs of rejection, then give me that bullish engulfing candlestick. I'm saying that bullish engulfing candlestick has closed. What I normally do is go to my smaller time frame, the 1 hour, 30 minutes, and the 15-minute time frame, looking for a structure break to the upside since it's a bullish engulfing candlestick. So on the smaller time frame, what I want to see is structure break for price to start pulling back for a retest of that level that was broken. Then I'll bring out my Fibonacci from the swing low to the swing high, place my limit order at that 50% level, the stop loss below 0.764 the Fibonacci, and aim for 2 times to 3 times my risk, depending on where structure is at, looking at past data. Another way I approach the market is looking at the daily and the 4-hour time frame. Those are my big time frames where I follow the overall trend or the overall direction of the market. So let's continue using the 4-hour as an example. Let's say this is a 4-hour time frame. The price is coming down, approaching a level of support, and boom, price got to that level of support. On the 4-hour time frame, once I see that price has started to reject that level of support, this time around I'm not looking for engulfing candlestick. This is another way I approach the market. Once price is at that 4-hour level of support, I immediately will go to my smaller time frame and look for the double bottom or an inverted head and shoulders pattern, or some kind of a consolidation around that 4-hour level of support. So this one here is the 4-hour time frame. So this is the 4-hour time frame, and this here is my smaller time frame, like the 30 minutes, 15 minutes time frame. I'm looking for either of this, either a double bottom, an inverted head and shoulder, or a consolidation. But I'll then wait for price to break the neckline. For this double bottom, I'm waiting for price to break the neckline. This is the neckline of that double bottom. Then for price to come and retest that neckline. And seeing that price has started to pull back, that's when I would then draw my Fibonacci from the swing low to the swing high, place my limit order at that 50% level, stop loss below 0.764, and aim for 3 times my risk. If you want to have a higher win rate with this particular strategy, you can aim for 2 times your risk. Majority of the time, price gets to 2 times my risk and come back hitting break even, altogether just crashing down. So with 2 times your risk, you have a higher win rate with this particular strategy. Then wait for price to trigger and continue pushing up. Now mind you, with this particular approach, we don't have any buffing candlestick on the 4-hour time frame. So with this one, I'll consider to be a B plus setup. An A plus setup for me is when there's an engulfing candlestick on the higher time frame for executing. But there are times where price doesn't give that engulfing on the 4-hour time frame, while price is at a level of support or resistance. But on the smaller time frame, there is structure break. If it's at the level of resistance, there's a structure break to the downside on the 1 hour, 30 minutes, or 15-minute time frame. But price isn't giving that engulfing candlestick on the 4-hour time frame. So that's another way we can approach the market. Once price gets to a 4-hour level of support, you look for either a double bottom, inverted head and shoulder, or some kind of consolidation. Wait for price to break the neckline of the double bottom or the neckline of the inverted head and shoulder, or for price to break that consolidation, retest it and continue pushing upwards. Now for resistance, let's do a resistance example here. Say price is coming from an uptrend. We have our resistance there. This is the 4-hour time frame. Now price is at that 4-hour level of resistance. Let's see. This is the level of resistance. This is the level of resistance here. The price has approached that level of resistance. Now all of this that you're looking for should be during session. If you're trading GBP pairs, it should be during London session / New York crossover. You don't want to be trading during Asian session. I don't trade Asian session anyways. Once price approach that level of resistance on the 4-hour time frame, and you start to see some kind of rejection on that 4-hour time frame, that's when you then go to your smaller time frame and look for, this time around, a double top. Let's mark this here. This here is your 4-hour trend. So 4-hour trend. And this here is your 15-minute time frame. Let me change the color. So this here is your 15-minute time frame. You're looking for a double top, a head and shoulder, or a consolidation. So this is a 15-minute time frame. Price has given us a double top right there. So what you then do is wait for price to break the neckline of that double top. Once price starts to retrace, you pull out your Fibonacci, draw it from that swing high to where price started to pull back from, and place your limit order at that 50% level with stop loss above 0.764 and aim for 2 times your risk. And you wait for price to trigger your limit order, and all you have to do now is be patient for price to do its thing. So you can see the structure break. Price gave us that lower low, and once price gives a lower low, the next thing we are waiting on is for a lower high point. Price gave us that lower high point, and boom, lower low, take profit, smash. That's it for double top. Now let's do head and shoulders setup. Head and shoulders setup. Now for head and shoulders, price has gotten to that 4-hour level of resistance, and we have that bullish trend here: higher high, higher low, higher high, boom, double bottom, lower high point. We have our head and shoulders. Wait for price to break the neckline of that head and shoulder. Wait for price to start retracing for a retest of that level that was broken. Structure break to the downside right here. Pull out your Fibonacci from that swing high to where price started to pull back from. set your order at that 50% level. Stop loss above 0.764. Aim for 2 times your risk. And if you see that probably the structure went all the way down there, you can see if you can aim for 3 times your risk, aiming for that support right there. But if structure is around 2 times your risk, there's a high probability of price getting to this point down all the way here to this second structure here. Just aim for 2 times your risk right there. This price could just trigger your entry, get to this point here, and continue pushing upwards. So that's it for a head and shoulder setup. Now let's do a consolidation setup. The price is at a 4-hour level of resistance and it starts to consolidate. Price starts to consolidate. What you do is wait for price to break that consolidation. See, you have a clean breakout there. Wait for price to start retracing. Then pull out your Fibonacci from that swing high that started that structure break to where price started to pull back from. Set your sell limits at that 50% level. Stop loss above 0.764 and aim for 2 times your risk. Or this time around 3 times your risk, since support is all the way down here. All you have to do now is wait for price to trigger and continue pushing downwards. As you can see, we have that lower low, lower high point. Take profit smash. Take profit smash. So all you need here is patience. You need to patiently wait for price to get to a 4-hour level of interest, 4-hour level of support, or a 4-hour level of resistance during session. Once price starts rejecting, see signs of rejection, you go to your smaller time frame and look for these things that I've shown you right here. So this is the Fibonacci setup. For those of you that are asking, you can pause the video and set your Fibonacci like this. Set your Fibonacci like this. These are the colors: green, this one black, 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 same green color. This is the one I choose for this one. That's it right there. And focus on the percentage also, the opacity. This the golden zone, 100%, 100%, golden zone, 100%. So that's the setting right there. So on your next trade, or you can even backtest it. You can backtest this particular strategy that I just shown you guys and see for yourself. You have a great weekend, and I'll see you guys in the next video. Peace.